let's also find out which stocks are going to impact your portfolio, which ones you should watch out for in trade. Our team of research analysts as well is now joining in. Let's begin first up with Pankaj Podar, who's talking about the FTSE rebalancing. Pankaj.
Right, today is FTSE rebalancing, or probably from Monday is FTSE rebalancing. So from today close, you'll see the changes being effective. And there are some large names that actually impact. Mostly it's an inflow rather than an outflow. Outflow are only a couple of names, with names like IndusInd Bank and maybe a couple of other large cap names. And that's also not quite material. The interesting one, of course, will be Page Industries, where you have an inflow of around 47 odd million. That's a big one because it's 9 days average volume for that company. Biocon is also an interesting one, but it's about 2 days of its average volumes. Vakrangi is greater than 5 days in terms of its average volume in expected buying, but it's a circuit stock. So again, there could be a tracking error over there. Once it goes on circuit, it's very difficult for any fund manager to go ahead and buy. ICICI Lombard, Interglobe Aviation, Dalmia Bharat are some of the other names that have some massive flows as far as compared to their averages. Some of the other names like Eris Life Sciences, Finolex Cable are also a part of the small FTSE indices. So there are also some positive flows on those particular names.
All right, thanks very much for giving us a heads up on that. Meantime, let's take it across to Ajay. And Ajay, we've been talking about the auto space quite extensively. Tata Motors in focus, CLSA downgrading the stock. So clearly, life not in the fast lane for the counter.
Well, Avan, it's like it's a clear case of kicking a dead dog, because the stock is already underperformed so massively, and the bad news is just not stopping for Tata Motors. We've already seen a very lackluster volume on the JLR front. And now Tata Motors go on to say that competition in the SUV market is intensifying. In fact, they've come out with a very detailed note this morning saying that each of the new launches which are mapped ahead, German car makers are launching their SUVs exactly on the same time, which will intensify the competition. Not only that, the dealers' incentives for premium car segment is also going higher, which is likely to eat into all the benefits which the market was working upon would come from improvement in hedging losses. Remember, 2 quarters back, that was a big issue. So CLSA has cut the price target to 330 rupees a share, and has also cut earning estimates by about 20% for 19 and 20. And they say that the situation is not improving in a hurry. So let's see how it goes. It has already been a very poor performer compared to rest of the peers in the auto space.
Right, Ajay. Thanks a lot for that. I quickly want to mark US markets once again before we take a break. And US markets last night, you can't say that they were firmly fixed in red or green, because US markets at best they were slightly mixed. So we are not working with excellent set of global cues, but this kind of an consolidation, I guess for the moment, is not bad news for the market. If markets they consolidate in this broad range, if mid-cap stocks they selectively start picking some steam, it's not bad. I mean, look at a classic case here. A stock like GHCL or a stock like Eveready in last 2 or 3 days has seen an uptick of about 10 to 15%. So whereas the index was down yesterday, I guess individual stocks are really moving along very, very smartly. I would be focusing on that aspect. Not every mid-cap stock is great, but not every mid-cap stock is bad, and I think the differentiation now clearly seems to be kicking in.
Okay, that's a check-up on the global markets. Lots of other stocks are in the news. So let's take it across then to Poonam. And days after the Power Ministry's mandate to financiers asking them to stop lending to loss-making discoms, PSC expects the FY19 asset quality to improve, and the company said in a conference call just last evening that they do not expect a higher haircut when it comes to stressed assets. Poonam joins in with all the details. And Poonam, the stock was pretty much written off by brokerages. What exactly is the management saying in the conference call? What are some of the other key highlights?
Well, thanks for that, Avan. In fact, it was a very long call. It lasted for over 1.5 hours, in fact. Well, the management sounded fairly optimistic in terms of FY19. Firstly, they are stating that the asset quality, they are seeing the asset quality, in fact, to improve in FY19 slightly, both on the government sector as well as in terms of the private sector exposure. However, they do state that these spreads are likely to see some pressure going ahead. In terms of the asset quality, they stated that 83% of the loans are to government utilities, and there is no stress here because they are getting regular payments. But on the private sector book, wherein they have over 44,000 odd crore of exposure, 30,000 crore of this exposure is slightly stressed. It is within the NPA recast or standard assets, and this 30,000 crore of exposure, which is nearly around 90,000 megawatts, is slightly under stress. Having said that, they're also stating that they are expecting the government sector NPA to reduce slightly going ahead. They're also stating that the private sector NPA may reduce to nearly around 2.2% by the next year, and the reason that they are optimistic is that they are expecting higher power demand going ahead and also higher power rates. In fact, they stated that the power rates have gone up to as much as rupees 7 per unit. They're also stating that they are not expecting higher haircuts in terms of the stressed assets going ahead, and also they stated that they're seeing adequate demand from Maharashtra, Gujarat, UP states, and they do not really have any exposure to Tata or Adani's, in fact have paid or prepaid to them. So overall, their entire con call highlights the gist was that yes, there is some amount of improvement in the NPA stress that they're seeing, but spreads may in fact go ahead and reduce going ahead on account of competitive pressure. Deutsche Bank, this time has stated that they are finding the valuation comforting at 0.6x, and hence they have a buy rating with a target price of 140 rupees per share.
Thanks very much, Poonam, for that. A 1.5 hour conference call, and the crux of the matter is, yes, that the overall asset quality is improving.